This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. We're also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. And I also have Kari Phillips, who's the director of RateWise Mortgage, NMLS number 309701. She's been doing this lending stuff for 18 years. Welcome back, Kari.
Thanks for having me.
Tell me what's special about a VA. What's a VA benefit? Tell me about a VA loan.
The great thing is that you are able to come in with a 0% down payment. Most military people know that. They know of zero down or, kind of buzz. But you don't have to pay this private mortgage insurance stuff, which is an extra insurance that anybody else that puts less than 20% down typically pays. Private mortgage insurance that if you fail to pay your mortgage, then the insurance company makes sure that the bank is paid. You can come to the transaction with zero money down. There's ways to do it. Now, you're going to have title costs, you're going to have taxes and insurance to pay, but there's a couple of ways to do it. You can either get the seller to cover those, but another way is to you can raise the interest rate by 0.125 or 0.25, which gives a nominal increase to your payment, but covers the taxes and insurance, and where you don't have to come out of pocket for any money. It's called a lender credit. I'm finding that VA appraisers are being a little bit more forgiving, and and also they've improved on their timing. I don't know if you've had a VA loan in the past, if you're an agent out there or a VA buyer, they used to take forever to get back. You could never, closing in 30 days on a VA was really good because VA appraisers they were allowed 10 business days, and they've changed that to be where you have to give the VA appraisals back to the lender within 7 business days. So that timing has also allowed VA buyers to be more competitive in the closing timing that's needed with the market now.
The other thing I wanted to talk about was these non-allowables. We've talked about this several times recently, where there are certain costs that the borrower, quote unquote, is not allowed to pay. And these are called VA non-allowables.
There are things like escrow fees, buyer's agent fee, termite inspection, inspections. There's a list. If you Google VA non-allowables, there's a list that comes right up on page 1. Okay.
But there are certain cases where they can pay those.
There are certain cases, and the reason I state it is not to say, hey, buyers, you're allowed to pay these non-allowables now. I'm trying to say sellers were a little bit. And you can speak on this better than I can, Harvey, but sellers didn't necessarily like to accept VA offers because they thought they had to pay these non-allowables, which would actually hurt their bottom line. If a lender that you're using is not charging a 1% origination fee, and by the way, we don't charge lender fees at all, you as a buyer are allowed to pay up to 1% of the loan amount to go towards non-allowable fees, which, you might think, well, I don't want to pay that, but in a competitive market, this is if you were to get the house, if you were to pay 1% of the non-allowables or not get the house because nobody else is asking for closing costs from the seller to be paid, you will make that decision of, well, wait, I'll pay the 1% because I want to get, where before you weren't able to do that. If you had a bankruptcy and you are a VA buyer, you can actually purchase 1 year out if it's a Chapter 13 or 2 years out if it's a 7. Now, that's the same with FHA financing. But if you had a short sale with FHA financing, you have to wait 3 years. For conventional, you have to wait 4 years. For VA, you only have to wait 2 years. For foreclosure timing, VA, you're allowed to use your VA loan after a foreclosure of 2 years. Conventional 7 if it's combined with a BK. So it's a lot longer with conventional. And it's 3 years for FHA.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.